Hey everybody, welcome in. I am live from Savannah and wanted to reach out and talk to you a little bit about LNG today. So Savannah is real close to Elba Island, which exports about 300,000 decatherms a day. Sounds a lot when you say 300,000 decatherms a day. However, when you look at how much the nation exports, it's about 18 BCF a day. So this is zero point 0.3 BCF a day that is exported out of Elba Island on here close to Savannah, Georgia. So listen, I wanted to talk a little bit today about LNG. So when we're looking at LNG, one of the things that we evaluate is we are exporting 18 BCF a day. Well, what does that mean in relevance? Well, we're producing about 107 BCF a day, so you could call it probably 15, 16% of the US supply is being exported via LNG. But now we got to talk a little bit about exports as a whole. We are exporting about 6 BCF a day to Mexico. So we're starting to get to 25%-ish of our US supply that is being exported. So when you're looking at these exports and when you're looking at how they play into things, it's important to look back at history. In 2022, many of you that cover natural gas do realize that Freeport had an accident. Freeport had an explosion. It was very unfortunate, but it shut down the facility for some time. What that meant is there was about 2 BCF thrust back into the U.S. supply. What that did is, I think natural gas, when it happened, was probably trading about $5 and went down to $2 and even below $2. So the U.S. has gotten very comfortable and needs that export. And there are signs that there are a lot of positive indications there, such as Golden Pass. Golden Pass is going to be adding export capacity in February or March, about 2 BCF a day. So when you're looking at that 2 BCF a day, then you get up to 20. Well, that's still, we're going to be exporting 26 BCF a day. If any of those exports have a hitch and come back into the US, natural gas prices are going to go down in a big kind of way, because part of the price constitution is the balance of supply and demand. And right now, as we're sitting in winter, we're marginally above the 5-year average when it comes to natural gas storage. That means some positive things and some negative things for the market. The positive things is it means we've been able to manage close to historical averages when it comes to kind of the balance of the market, which is the storage. The negative is supply and demand have increased so much, but our storage capacity has not. That is going to be a ticking time bomb to where it is going to introduce big time volatility. That doesn't mean volatility up. That doesn't mean volatility down. That means volatility. That means we will have times where we rise and times where we fall. And by the way, a little bit of housekeeping since I am on the road. This is going to be a shorter one, probably 10 minutes or something like that. I see that I've gone up about 4 minutes. But what I really wanted to cover today was how much the U.S. supply and demand has already started depending on that LNG exports. Now, when we're looking at the LNG exports, a lot of people just start with the capacity and how much we've shipped out. That's not the best place to look. Regasification is where to look, as well as competing supply sources for that LNG. So let's start with demand. TTF, which is it stands for Tidal Transfer Facility in the Netherlands. That is a big LNG price marker, and that kind of shows the theoretical price of what European gas is trading for at that import facility, which is trading right now about 950 roughly. TTF is kind of the European benchmark. So when you have U.S. gas at 3, TTF at 9, that seems like a reasonable spread. However, historically, when natural gas has been 3, TTF has been closer to 12 or 11. So that means that the demand side is pushing the price point in Europe down. Similar, similar dynamics at JKM, which is the Asian price, and that stands for the Japan Korea marker. So when we're looking at the Japan Korea marker, we can look at the prices hanging around 950. So that is kind of where we're looking at both sides of the market, and that one usually trades about a dollar higher than TTF. So the fact that both are there in the middle of the winter is really concerning, and it really gives me some nervousness this spring that we're going to have some LNG ship out softness, meaning we're not going to have enough places to put this gas because Europe is limited on storage, and you can see a ship right behind me. That is a storage ship. This is really cool. And if you're ever someplace and you see these ships, there's a great website called marinetraffic.com where you can track these ships real time. So it's actually pretty cool. But anyhow, when we're looking at the springtime, there could be significant softness in the marketplace. And if there aren't enough, if there isn't enough demand for storage for European markets and Asian markets, then we are going to be looking at LNG shipouts going from, say, 18 BCF a day. This is before Golden Pass has come on, down to 17, 16 BCF a day. That is going to have a significant price response in the United States, probably a 10 to 20% price move. So let me say that again, probably about a 10 to 20% price move. Conversely, if Golden Pass comes on and we export 2 BCF a day more, we're going to have about a 10 to 20% price move the other direction. So I'm not saying it's going that direction, but I'm saying this spring, I'm getting concerns about LNG overcrowding, and there are some statistics backing up that there are expansions taking place in Australia, one of the other big countries in LNG exporters. There are expansions. There's a massive expansion underway in Qatar. Off the top of my head, I can't remember when that's coming on, but I think that that is coming on soon. So that means there's going to be a lot of exports that are going to be competing with one another, which means it's going to come down to what those exports are priced at. And US LNG is more expensive than Qatar. It's more expensive than Australia. So when we're looking at those exports, that's going to come in key. But let's go ahead and land the plane. When we're looking at natural gas and when we're looking at this spring, one of the key things to watch is going to be monitoring that LNG price every single day, as well as the LNG ship outs. Now, if you don't know where to look, if you are struggling finding that, we have a product, Rogue Radar. You can learn a little bit more about it down below. It's $89 a month, and we track the LNG prices every single day, as well as the LNG ship outs every single week. We think daily is a little overkill, and we try and keep our subscription prices low and affordable, because alternatives cost you thousands of dollars a month for institutional level insight. So listen, you can learn a little bit more below, and if you are interested in learning about the oil and gas markets, but you're struggling with finding the right information or spending too much time, there's a link to an ebook on mastering oil and gas market clarity. And it's going to give you a roadmap on how you can isolate the market within 5 to say 10 minutes a day. So listen, this is Brian. I'm in Savannah, Georgia. I hope you're doing great. And listen, thanks so much for tuning in, and drop me a comment down below and let me know what you want to hear about when it comes to the energy markets. Thinking about doing something either on the refined product side, which a lot of people miss because that impacts crude markets pretty heavily, or the natural gas liquid side. But there's so much happening with oil, so much happening with natural gas. A lot of times we stay on those. So listen, hope you're doing great. We'll talk soon.